Hello and welcome to the latest edition of the Tax Hour. I'm really pleased this time to be joined by Emma Rawson, who is Director of Public Policy at the ATT. And Emma, I've seen loads of your things on LinkedIn about Making Tax Digital. So we're talking Making Tax Digital today. And I can't think of a better person to talk about it. So, and I know you're talking, you've got loads of other webinars, seminars coming up, haven't you, as well? So today we're just kind of going to chat about Making Tax Digital. What is it? Why is it? Who needs to know this kind of thing? Aimed at both agents and clients, I think. But largely, we want to talk about how do we make sure agents and accountants are prepared for this as well. And then, we'll see where the conversation takes us. And, for anybody wanting a bit more detail on this type of thing, then Emma's webinars.
Absolutely. An ATT website, I have to get the plug-in.
Yes. I'm going to plug them a bit more because when I was preparing for this, as I was saying before we started recording, I do all advisory. So this hasn't really been on my radar at all for many years. And actually the ATT website, they've got some brilliant FAQs.
Oh, brilliant.
I might as well just go through the FAQs and say, Emma, let's just start. No, but it is a very good website and it was useful to kind of just get some high-level understanding of it from there as well. So definite good plug for the ATT website. Should we start at the beginning then? So, and again, we talked about this briefly a moment ago before we started as well. This was announced in 2015. At that point, I was still in personal tax. It literally feels like a lifetime ago to me. I was in personal tax. I was thinking, does this mean that we won't do any self-assessment? Will clients be doing it all themselves? It's not materialised that way for various reasons. I think by now, and correct me if I'm wrong, but when they announced this, wasn't it all meant to be in by 2024, was it, or something?
Yeah, absolutely. So it's 10 years this year and it was George Osborne who was Chancellor at the time. That's how far back we're looking. So they put the budget and announced the death of the tax return. It was supposed to be, income tax was supposed to be in quite quickly. That got pushed back behind VAT and it's been pushed back even more. So actually we now got MTD for VAT in place, income tax starting from next year. So it's going to be nearly 11 years and several delays down the line since it was actually announced. So it's definitely had a bit of a checkered history. And I always get asked by people, is it actually happening this time? And I must admit, I've been asked that over the last probably 5 to 6 years. And I always said I wouldn't bet my house on it, but I'm getting closer to betting the house on it now. I do a lot of work with HMRC, and from what I see behind the scenes, they have completely shifted into a readiness and a delivery mode on this. Right. And there's definitely no signs that they are slowing down. So never say never. But I would be very, very shocked if we didn't see something in April 2026 now. Yeah.
And so I guess there's two things that kind of make you think, maybe doubt. Firstly, we had a new government. I don't think there's any change because all of a sudden we're under a new government. They've not said, well, we're going to...
Absolutely not. If anything, the opposite. So at the autumn budget last year, they pretty much underlined their support for this by saying they were not only going to commit to the original not the original timetable, the current timetable of it coming in from April 2026, but that they'd actually bring in lower income taxpayers at a later date. And then again, at the spring statement, they put in a date for that. I think the new government have not only said they're supporting it, they sort of double underlined their support with those announcements.
Because we had have I got this right as well? In the spring statement 25 did we have a consultation as well on something? Or was that just what you were talking about?
We had a bit of a look at what we were going to do with the lower income population. So the first people being brought in are those with income over 50,000 in April 26. Then a year later, those with income of over 30,000 in April 27. And it was always the intention to bring in lower income taxpayers in the future, but it was left sort of open to debate. And a couple of years ago, they looked at it and went, well, we're not sure. We'll look again in future. But then at the autumn budget last year, they said they were going to bring in anybody over £20,000 at some point before the end of the Parliament. And then in spring statement, that was confirmed. It was April 28. So we've got sort of three phase dates now that have been confirmed. Okay,
so by April 28, most people will be in it, I'd have thought.
Most sole traders and landlords, because we're looking at a £20,000 gross income limit by that point.
I was going to say it's income, not profit.
It's income, not profit, absolutely. So income before expenses. Even for landlords, if you're looking. I mean, I come from West Yorkshire, so actually £20,000 of rental income is probably, half an estate where I am. But if you're renting property anywhere in the southeast or London or wealthy parts of the country, £20,000 goes really quickly, and you could have one rental property and hit that quite easily. Yeah.
Okay, that's when I was preparing for this, I was thinking £20,000, and in my head I had profits, and I don't know why. It's income. But income. Yeah, and presumably, if that's gross income, that's before you've paid an estate agent any.
Yeah, absolutely. So before any fees, any expenses, and if you are a sole trader and a landlord, so I always do the example of the plumber who's got a buy-to-let. You're looking at your property and your trading income together as well for that.
Okay, so it's total income.
Total income from property and from trading. Yeah.
Right. So if you've got other income, say dividends or whatever, that's excluded. You ignore all that, It's just trading
so we ignore the dividends, we ignore PAYE income. It's really just income from trading and from property that we're looking at.
Understood. Okay, so what is Making Tax Digital then? Because Making Tax Digital you just think that's just a term. It's been there for so long. What actually are we doing now? So We've had self-assessment for 27, 28 years, something like that, before my time, thankfully. And so this is kind of the next, I feel like most people say this is kind of the next major change since self-assessment.
Yeah, I think it's the biggest shake-up to income tax since self-assessment came in. So we're moving away from just having that one touch point a year where you do one self-assessment return to having more regular touch points. And there's 3 sort of components, just to break it down, that are the key ingredients of MTD. The first is digital record keeping. So you're going to have to use some kind of software to keep your records for your business, for your property. Mm-hmm. That means no more sort of shoebox full of receipts once a year, but also no more, lovely, beautiful handcrafted ledgers. I know some people have fantastic handwritten records, but they won't be allowed. So you're going to have to use some kind of software to keep the records. You'll then use those records to file quarterly updates with HMRC. So that's the second bit, the quarterly updates. That's a big change because that's moving, as I said, from 1 tax return a year to 4 filings a year in year. Yep. But they're not tax returns. Okay. The quarterly updates are just summaries of your income and expense category totals in your records. No adjustments for tax, no adjustments for accounting.
So it should be fairly easy to put together?
If, and it's a big if, you can get your bookkeeping right, then yes, actually the quarterly updates, your software should be able to pull them quite easily and file them. It's the big thing is getting the records. So I think there's been a lot of people talking about the quarterly updates, and absolutely having those 4 deadlines a year to think about as well is a big change. But I think we need to take a step back and actually focus on getting the books right, because quarterly updates should flow. Yeah. And then the third component is we're still going to, despite George Osborne's claim of the death of the tax return, have some form of tax return to do at the end of the year. Because all you file in your quarterly updates is your unadjusted trading income, property income and expenses. Okay. You're still going to have to do something at the year to make your accounting adjustments, your tax adjustments, bring in any other sources of income, so your dividends, your interest, claim your allowances and reliefs. Yeah. So there's going to be some form of digital tax return that you're going to have to do in software as well. That's the key difference. You won't be able to do it through self-assessment online service. That won't be available if you're an MTD. You have to use some form of software to do that. Okay.
So is this more work or less work? Because I always think, well, if you do things gradually over the course of the year, by the time you actually have to do your tax return at the end, you've kind of got there. You've got a few little adjustments, but you're pretty much there. Do we think this is actually going to have that effect, or are we actually saying, well, all that's going to do is, you've got these, but that's kind of going to be auto-filed with the software?
Yeah, I think in the medium to longer term, it could make life a little bit easier when we've all got across the big hurdle of getting there. Yeah. I think in the meantime, in the short term, it is a lot more work. Now, if you are used to only dealing with your clients in December, January and doing their tax return once a year, absolutely, something's going to have to happen quarterly now. So there is a change there. I think it's an interesting point about sort of cutting and spreading the admin. So you're not just going to have the shoebox full of receipts in January. You're going to be breaking that down over the year. So that could, if you can get your systems and your processes working right, actually make life a bit easier in January in the long run. Yeah. And that's certainly how HMRC are badging it. So they've put out some Spotify and radio ads targeting the construction sector. So going straight to taxpayers, which do say it's spreading the load through the year. That's the line they've taken, that you don't just doing it all in January.
You can see the theory. Yeah. But the practice, I do still think maybe the self-assessment, well, it's not self-assessment, is it? But, the the annual return is still going to be the bulk of the work.
Yeah, because you're still going to have to do your tax and accounting adjustments and all the rest of it. And don't forget, actually, not all of your clients might be in MTD. So you might have clients who are below the income threshold or are in self-assessment, not because they're trading or property, but for some other reason. You're still going to have their self-assessment returns to do as well. So that's not going completely. You can voluntarily join, and HMRC would love it if you do. I'm not too sure so many people will, but you know.
I was just thinking, if you're an accountant having 95% of clients in,
actually, and you just want to make everybody on the same schedule, you could bring people in. And to be honest, if you've got people who are just under the threshold but likely to cross in the future, it might be easier to just bring them in as part of a big bang start rather than keeping an eye on it and bringing them in down the line.
Yeah, that would make sense. To be honest, from what we've said, I kind of think a lot of this is training the client. You know, if the client has good records at the start, then how much work is involved for the accountant on the quarterly side? Because as long as they've actually put and the problem is, I think a lot of small sort of trading businesses probably have, you know, a bank account with a million different expenses, and not necessarily
and they don't have
a
business bank account.
So those I think are the problems that but once those problems are solved, which they're going to have to be, perhaps actually, as long as the client has a better understanding of how he or she actually accounts for, it's not even accounting, I don't want to use that word, even that might be a bit too technical for some clients, but you know, making sure that their income goes here and any expenses, you only use this card for that and things like that. Presumably that's one of the biggest hurdles for accountants, to actually say, you know what, you can do most of this yourself. You don't need to pay us every single 3 months to do. Yeah,
I mean, it's a really good point. I think if you can get clients to that point, that's fantastic. But I know some clients are better than others, and people can be absolutely amazing at running doing their business, but that doesn't make them a bookkeeper. So I think there's quite a bit of training. But I mean, you can. There's the thing about MTD is there's a range of different support you can give to clients. At one extreme, you can do absolutely everything for them. So you can do their bookkeeping, you can file their quarterly updates, you can do their year-end return. That's obviously the most work for you. At the other end of the spectrum, they can do pretty much everything themselves if they're happy to, and you trust them, which is the bookkeeping.
And you trust them. There's the big if in there, wasn't it?
It is, You know, they can do the bookkeeping, they can file their quarterly updates, and then you just come in at the year end and do the tax process, which won't be much different to what you do now. And there's a sort of spectrum between there, and where I think some people will fall is a sort of halfway house, where they get a bookkeeper to do their bookkeeping and file their quarterly updates, and then you just come in and do the tax at the end. Now, it's really interesting you were saying about trusting them to do the bookkeeping right. And the one thing I keep being asked by members a lot is actually if the client's doing their own record keeping or a bookkeeper that isn't part of my firm is doing them, how much do I need to tear that apart if I'm filing the quarterly updates? How much auditing do I need to do? And we are aware that that's a real concern for people. So at the moment, the PCRT bodies, the 7 professional bodies, are working on a topical guidance sheet that will actually address, if you're in that scenario, how much checking you need to do. So keep an eye out on that if that's something you're worried about.
I do remember in my early career thinking, because I actually started in audit for my sins and then moved into personal tax. And you kind of, taking that progression, you kind of have an auditing mind on. So someone sends you
we want to get things right as agents. I think that's the thing. We're not happy with something being not quite there.
You're there to protect your client and make sure you know you're doing the best.
Absolutely, but the quarterly updates are a strange beast, really, because they're not strictly a tax filing.
No.
They're not tax or accounting adjusted. They don't directly feed into your tax liability. You'll get given a little forecast, a little calculation in your software.
That's another positive, isn't it? That actually you can say, well, looking at each quarter, this is how I've done compared to last year, so how's my tax payment?
With the big caveat that it's not tax and accounting adjusted, and if you've got a seasonal business, it might not be right. So actually, I think some people like that idea of the in-year calculation. Other people are like, I'm going to tell my clients to turn it off if they can, because they're just going to get worried. But I mean, the quarterly updates are strange because they're not tax filings. And the weird thing is and this is, I think, what sort of gets to us a little bit as agents, there's no penalty for errors in quarterly updates. So you do not need to make a declaration like you do when you file a tax return that this is complete and correct. But that equally means you can't just file absolute nonsense. So where do we sort of sit in the middle?
I was going to say, if there are no penalties, why not just go, I've not got time now, I'll just stick 10 grand in?
I hear lots of people saying that. I hear people saying, I'm just going to stick zeros in.
Zeros might be a bit extreme.
Or I'm just going to do an estimate based on what was last year's figures, a quarter of everything. That's not, I think at the heart of it, coming back to how the quarterly updates work, they're drawing from your records. So there's no penalties for getting your quarterly updates wrong, But there are penalties for not keeping records properly.
True.
And actually, I think if you are filing something that is an estimate or is nonsense, that's a sign to HMRC, if they pick up on it, that you've not done your records properly, and they could penalise you for that. So you can't just file zeros. You can't just file any alt figures. It's got to be... you've got to do your best to try and get it to something that looks sensible. So, I mean, I don't want to spoil the surprise of the PCRT help sheet that everybody's very excited about, but I think where you've got to get to is just be a bit sensible and risk-based. So if you know your client is fairly good at keeping records, or they're using a bookkeeper you know is decent, it might be a light touch. It might be have a look and go, actually, you know what? Normally they turn over 25 grand a quarter, but they've only reported 5. What's going on? You might want to ask. It's that sort of level of sense checking, but it will be, I think, have to be flexed depending on who's doing the records and how much you trust them, really, I think, as well.
It does also make me think how the industry might change in terms of, there's loads of sort of 1-2 person accountant firms out there. Will they actually say, well, we've got a bookkeeper down the street, why don't we merge? And,
absolutely, that type of thing. This is a real boon, I think, for bookkeepers. And I've been saying for a while to some of my members, make best friends with a bookkeeper if you can, if you're in a small firm. And actually, I joke that I might retrain because I think there's loads of work in that area coming up. But I think it's that working more closely with other people, because if you are in a very small firm, I think you've got to be honest how you're going to handle the extra work that comes with the in-year bookkeeping and the in-year filing, and it may be that you need that support, and that's where you land.
It's interesting to see how that might change matters over time. Okay, so we've talked a little bit about what Making Tax Digital is. We've now going to have quarterly updates to make. We know that it is gonna come in, I think. I don't think there's any point in saying, it might. I think at this point we're pretty...
I think even though I've been burned in the past, I mean, as I said, I engage with HMRC really regularly, and all I see is it's eyes on,
And the amount of things out there now, and the tax magazines,
the amount of software and the amount of the noise that's out there. And I mean, in the past when we've had delays announced, we've been kind of expecting it, and we've been waiting for HMRC to confirm it. Now any change would really be a shock, I think, for the system.
And also, what would the software providers do if they suddenly go, well, we've just spent millions updating our software?
They've already burned, to be honest, a little bit of goodwill, HMRC, with the software industry, with the complete, the repeated delays, because lots of software businesses put a lot of money into developing MTD products, and then it got delayed, and then it got rescoped a little bit. Right. So I think that would really damage the relationships there. I think that they've really tried a lot to rebuild, and they've done a good job of rebuilding over the last few years. I think that would be... And ultimately, the success of MTD, because HMRC are not providing any software or online filing, depends on the availability of third-party software. So that is a really key relationship there.
So we talk a little bit about software.
Yeah, sure.
Not promoting any software.
No.
So obviously there are... to be honest, can't promote them because I've never used them. But, there's software packages out there that are they all up to at the same standard? Are they?
There's a range of different options.
I'm conscious whether to name any. We'll bleep them out if we don't want to. But things like Sage, QuickBooks, names, but I can't think of any others off the top of my head. But those types of ones have, I think, a lot of, and I'm just thinking what the accounts team within the Jerroms group do. A lot of clients have been on those types of softwares for quite a long time now, and so are they? The kind of the household name software providers, are they all up to speed?
Yeah, so the big names are pretty much there now. The couple that were a little bit later to the party because they were waiting for HMRC to confirm certain design principles. But they are all there now, and there's a sort of what you call your all singing, all dancing packages. So the ones where you can use them to the same package to keep your records, file your quarterly updates, do the tax return at the end of the year. At the other end of the spectrum, you can use bridging software.
Right.
Especially for filing quarterly updates and a spreadsheet. So actually, if you've got clients who are really struggling with, and you think actually giving them an accounting package is just going to be overkill, you could try and get them onto a spreadsheet. You'll then need a little bit of bridging software, which takes the numbers from the spreadsheet and files it to HMRC through their API, so through their interface into HMRC.
Is that a bit like IXBRL tagging where you have to just tell it what cells to look at?
Kind of, a little bit, yeah. So the different ones work in different ways, but most of them, you sort of train it on what cells have got the totals. It can just zip the totals out and then feed it in the correct format through to HMRC. Others, I think, come with a set format. You have to have your spreadsheets in. So it's worth exploring. Yeah. If you've got people who've got fantastic but quite complicated spreadsheets now, make sure you pick the right bridging thing so you don't have to change them. That is a cheaper, lower cost option. But the problem with that is you've still got to then do you've got to figure out how you're going to do the tax return at the year end, which might be harder with bridging software. I'm not sure that that's doable.
Yeah. Okay.
You could still, as I said, though, client could use spreadsheets, use a piece of bridging software to do the quarterly updates, and then you use your usual tax accounting software to do year-end return. You can use more than one piece of software. It's fine to do it that way.
Yeah, because I remember years ago, I told you I was a bit of a, not just tax nerd, but a bit of a tech nerd as well. So I have, and in fact, even now when we do things like demergers and stuff, and we've got a spreadsheet where you put your trial balance in, and then that will feed us into a balance sheet for each step of our demerger. And I think I had one for rent accounts when I was just doing property tax returns and things. So software can do a lot of, in terms of if you're relatively decent on Excel, you can have it produce you a fairly decent looking set of accounts.
And I think Excel will work quite well for some people, especially I think landlords. Yeah. If they've not got as many transactions going through or fairly straightforward businesses. Consultants who don't have huge numbers of expenses to keep track of. I do a bit of freelance work and I just have a spreadsheet for that because that's all I need for my invoices and the odd bit of expense. It's fine. So I think that's one solution to not lose sight of. You don't have to bring everybody into one of the big household name accounting software. Actually, spreadsheets might work for some people. Yeah.
I actually, again, I'm just thinking of all types of software. I'm sure there's some bank accounts even kind of will feed into. I know you can obviously have most of the main software providers
have a bank feed, yeah.
I'm sure there's some bank accounts that basically will produce it for you.
Possibly, yeah.
I don't know. Maybe I'm making that up.
I mean, bank feeds. It's a good point actually because I think again, little bits of housekeeping you can do with clients is try and get them into having a business bank account that you can link to bank feed. Yeah. We know clients are terrible at keeping business and personal separate, especially sole traders. If you can get them onto a business bank account, that's great because you can pull the feeds through. Just be aware. With bank accounts, you might have to do a bit of digging because remember we said at the very start, we've got to report income before expenses. And some things, especially if you work through platforms, you get fees deducted. If you're using a rental agent, you might get...
It's not just you've got your income is your income,
yeah,
is it?
So make sure that you're getting the information you need. So I think bank feeds are a really, really helpful step. But there's a little bit of work needs to be done as well, I think, because and even with a business bank account, they'll go to the petrol station and they'll buy, petrol, but they'll also buy a bunch of flowers, and there's always little bits of stuff to tease out. Yeah, but
I do think, and this is stepping a little bit away from making tax digital. If you actually embrace the software and if the software works, actually it could make our lives a lot easier. With having, 10 years ago we didn't have bank feeds that could do that, and now we have bank feeds. I know the bank I use, which is actually an online bank now, because I moved away from my high street bank because just the internet banking was just a bit archaic, really. And I actually read that actually these online banks, of which there's quite a few now, quite mainstream, I think now, but they are, because they've not got all of those sort of historic issues, their apps and things are so much more modern.
And it's that digital first approach that I think HMRC and government are hoping to bring to the tax system, that this is just how we'll do things going forward.
I mean, my bank, I can categorise everything now.
Yeah.
And again, if you've got more than one bank account, you can it will show you that, so you can show income, expenses, and then split the categories.
Yeah, and you can do that in lots of software. You can train it to recognise that this is this category of expense. If I'm buying stuff from there, if it's this, it's rental income. So and that will all those kinds of things. If you can get up to speed with your capability of your software, should make it a little bit easier to do the record keeping.
But then we come back to training clients on that stuff.
And also training staff sometimes as well if we've not been used to doing it. If it's digital bookkeeping is brand new, getting up to speed with all that, it is a big hurdle to get across. It's going to be a rocky year or two, I think, for some people.
Well, exactly. And I'm talking from the point of view that, as I said, I'm a bit of a nerd and like these things, and I moved banks because I thought that was quite a cool thing more than anything. I didn't move banks actually. I've still got both, but the one I use mainly, and so I think there's a lot of business, and I think you suggested it earlier, people are really good at running their business. Doesn't mean they're very good at running their accounts or their bank account or their finances. And, we've, as an accountant / tax advisor, I need to think not everyone's got the same brain as me in that sense. That, if someone going out doing plumbing and really, really good at that doesn't necessarily mean that.
Absolutely. So I think it's all about looking at your clients and I don't think a one size will fit all for most people. I know some people who've said, actually, my firm, everybody's going to have to go on to the software. That's it.
I've heard people saying, we're losing clients. We'll accept losing clients.
Or we won't take new people on unless they're willing to start using our software to keep their records. But I think for some other people, unless you're going to go to one of those sort of extreme positions, which I'm not criticising, I can absolutely see the simplicity of it, and it will make life a lot easier. It's not going to be a one size fits all. It might actually be having to look at your clients, thinking about each one individually, how much support they're going to need, who's tech savvy, who's not. And it's quite a big exercise actually getting ready. I think we think about when we get into April 26 and we're starting everything, there's quite a lot of work to do in the next 12 months.
Yeah. And I think most accountants listening to this probably already know which clients are in which category, don't they?
Oh yeah, they'll have them at the back of their mind,
from what we've said, I think we've got a big hurdle to get over.
Yeah.
But hopefully maybe that will smooth out, over the first couple of years. And but it does mean for accountants, whether you're small or big, you've got a big workload possibly coming in.
Yeah, there's a lot to get through in the next year to get ready. Yeah.
And what about, maybe this isn't if you as your Director of Public Policy at ATT, but what about costs to clients of doing this? Have you got much, have you seen whether accountants are thinking actually our fees are going to go skyrocket, or are people thinking they might absorb them, or...
I'm always a big fan of saying to people that if you're doing extra work, try and charge for it and don't undersell yourself, because I think we're terrible as an industry at doing that sometimes. But that makes it a very difficult conversation to have, because nobody likes going to clients and going, you need to do this, this and this and pay me more. Not because, especially if they can't see the benefit to them, but because HMRC say so. And that's a really awkward conversation
that's the
to
thing,
have.
Nothing's changing for them. They've still got their business. They've still got that amount of tax to pay. But now they've got extra things they need to do. And I mean, down the line, actually, there may be benefits to them in terms of actually having a better view of their profitability in year and the position of the business and all of this. So actually, I think, there are benefits to businesses of keeping digital records closer to real time. But I think definitely for some clients, it's a hard sell. So I think having those conversations up front with clients is important. But it's hard to know about pricing. And I'm having a lot of members asking me, or if I'm doing webinars, how do I price this? And I think I can't, unfortunately, tell you about that, but and HMRC can't either. But I think it's something that talk to your peers. I was going to say, everyone's in the same boat.
And I know it can be quite lonely in smaller firms, especially. But what we're trying to do is, and we're starting to set these up, and there's information on the ATC website, is like little monthly drop-in Zoom calls, where for an hour, small agents can just get together, talk about what they're doing, get tips, get best practice from each other. And it's really just about building that network. So if you're interested in joining that, you don't need to be an ATT member. Okay. There's information on the website all about that.
Shall we, if we've got the link, we'll put that in our little description, so people can actually go straight to that, because I think it's the same in tax. Collaboration.
Yeah, absolutely.
Is just key. It's kind of the reason I do things like this podcast, because it's all about, we're all in the same boat. Let's actually understand. And so one person has a good idea, and actually, because I always learn when I listen to agents talking about how they're approaching this and go, oh, that's a fantastic idea. So I know one person was saying they were going to encourage their clients to bring in their information for 24-25 early, so they'd have a better idea of who's in and out of MTD, and say, I can tell you sooner whether you're going to be in or out, because it's going to be based on 24-25 tax returns. So it was a way of getting actually the information quicker for self-assessment, which I thought was so clever. So there's all these little things that somebody's having a bright spark. I have seen a few people on LinkedIn say, I've got no tax returns in January because I told all my clients they have to.
They have to do them now.
If you can be in that position, I think most people are, but that's it's fantastic if you can. Okay, so shall we talk about who's going to have to do this? We know the limits. Who is it? Just sole traders?
It's sole traders and landlords in this for now. HMRC do want to bring partnerships in down the line, and they've reiterated they want to do that, so partnerships and LLPs, but we've got no date for that. They've kind of been kicked into the long grass because they are complicated in terms of reporting. I was going to say, with a partnership, you've got a partnership return, then you've got the individual's return. And how do you keep the record keeping, because each individual partner might have to keep records, and some might be in and some might be, it gets messy with partnerships. So there is the intention to bring them in, but don't worry about them for now. That won't be until well after 2028, when we've got all the sort of lower
so
income
years
tax
away from something like
definitely.
That.
And corporate's the same. So if you look at the latest published position, I think it says MTD for corporation tax won't come in before April 2026. Don't worry, it's not coming in anywhere near. It is a distant, sort of vision to HMRC at the moment. It won't be for many years. That Having said that, we're expecting a digital roadmap from HMRC over the summer, so we might see a bit more in that about timing for some of these things, sort of longer term. But for now, we're just worried about our sole traders and our landlords.
Yeah. I was going to say not to be sceptical, but if it's taken this long to get the income tax MTD in, a roadmap quite early on for corporates maybe take some time to materialise. So, am I also right that even if you're a sole trader or a landlord, if you've got certain types of income, so high income child benefit charge, are they set up for that yet? Things like that?
Yeah, so we ignore certain things like that. So that wouldn't be brought in.
Right. But you're still going to have to do the quarterly updates for the business.
Yes.
But you're just not.
But yeah. So I think high income child benefit charge, they're looking to change that to doing through PAYE anyway. So hopefully that will come through. But things like that would normally be swept up in the sort of year-end tax return. It wouldn't be a quarterly
so it's just
thing.
Not in the quarterly, but you're still within MTD for income tax
so
itself.
it doesn't take you out of MTD. There was a thing with the testing where if you had high income child benefit charge, you couldn't come into testing, but that's gone now for this year. Yeah.
Right. I think that's
possibly
what I'd heard people saying.
And it was the same if you had a furnished holiday let, which obviously we don't have any now anyway.
Yeah.
But last year, if you had furnished holiday lets, you couldn't come into testing, but those people are now
That's what I was thinking of and I'd heard. Yeah. Okay. As an agent, should we be thinking about, obviously we should already be thinking about this for definite, but should we be thinking about, you mentioned the testing, actually testing a few of our clients, just so as agents we can understand a bit more, or are they at the stage where actually, let's leave that, let that happen. They're in beta stages with that, and leave it happen, and we'll only think about it in April 26. Or is it worth us having a client?
I think it's worth putting at least one client in if you can. I appreciate it's extra work, and then we come up to can I charge for it? Probably not, because so there are issues, but. It's really the only way for you to stress test your systems and processes before we go live. I was going to say
it's more for the agent's understanding than it is for any client benefit at this stage.
Absolutely, for you to test actually how does this work and find out what the gremlins are now with a couple, rather than when it's your whole client base come August next year. So absolutely, I would encourage you to, if you've got one or two in, I would put more in if you want, but I would try put one or two in. I would say pick the tech-savvy ones. Don't pick the ones who are going to struggle the most. Put the easier ones in first.
Yeah.
And actually, if you're a sole trader yourself and you're going to be an MTD, you can put yourself in if you want to see what it's like.
Yeah.
And then you don't have to worry about the client costs and things like that. So I know some agents are actually putting themselves in because they're sole traders or they're landlords. I would also say about the testing, don't feel like you need to jump in and join it now. You can join actually at any point in the year. Right. As long as you've got digital records going back to the start of the year. So actually, if it gets to October, November, and you'd feel like you're in a better place then to put somebody in, you can put them in then. And all you do is, because your quarterly updates are actually cumulative, you just file one that catches you up to that year.
Okay. Right.
So you don't have to go baback and refile things as long as the records are there from the start of the year.
That's quite straightforward then to actually do that element.
Yeah. So it's absolutely worth joining if you can. If you can even join to just try and do one or two quarterly updates, just to see what it's like before you sort of doing it for real.
And I think that would obviously for very small accountants, that will help them just build a picture in their mind. But for bigger accountants who have hundreds, thousands of clients, they're going to, hopefully they're already on board with this, but they're going to need to understand how this is going to impact the whole team.
And the whole workflow and the whole team.
And all of
that.
So,
absolutely. And it comes down to even looking at staffing levels and things like that. Nobody gets to go on holiday in January. Does that now change to actually also, if we've got
nobody gets to go on holiday in these 4 months a year now.
She's going to make a HMRC very popular. But you need to think about these things. And even if you've got juniors who are out on study leave, making sure you're not putting study leave in at the wrong time. So it's actually the ripple effect of this.
I was going to say, does that therefore mean the study, the training providers for study, are they going to start thinking, when should we actually offer these?
I was going to say, I'm going to get in trouble with my education team here, aren't I? But it's all these things you've got to think about, even in a larger, I think if you're in a small firm or you're sole trader on your own doing this as an agent, it's a big ask of actually, can I do all the work? Do I need to make reference to bookkeeper? Is there other things I need to do? All the way up to the larger firms, it is about that workflow planning, making sure you've got the people in at the right time. And all the processes. I mean, the other thing, talking about medium to large firms, you're going to have to sign up each client individually. So HMRC aren't signing clients up. Okay. So it's only a 2-3 minute job. But if you take a 2-3 minute job and times it by several thousand clients, that's quite a lot of hours.
You're going to need someone just doing this.
Yeah. And you can start doing it now, actually, for April 2026. Just make sure you tick the right box and don't join from this tax year that you ticked.
I was going to say, if you go in, are you stuck in kind of thing?
Well, you can come back out again if you go in early by accident. But when the way you sign clients up is the same way you sign up for testing. So it's the same interface. You just say if you want to be in this year or from next April. But if you don't want to be in testing, you can start signing your clients up for April 2026 now. So
when they're going to have to be anyway.
Yeah, when they're going to have to be anyway. So it's about making actually a plan for the work of just actually making sure you've got time to get everybody signed up. Even that's quite a big ask if you've got quite a few clients. And as I said, there's no bulk sign up. HMRC won't be signing you up. You're going to have to do it individually.
Is there any plan for a bulk sign up?
No,
do we know?
no. So, yeah. It's been asked for a while. No. So
I'm quite surprised at that, but maybe it's just how the system's been developed.
Yeah, I think it is, and I think it's just thinking about the phasing of it, and actually, can you do it over a period of time rather than trying to make somebody's life miserable and doing this for every single one of your clients for a couple of weeks in March?
Well, if you test somebody now, and then in November you've got a bit of downtime, you can just go, well, we know a bit more about this system. Go and sign
some clients up, and just start doing it. If you've got those little troughs in workflow, it's a good time to.
Who's got a bit of time on their
hands. Work experienced kid, although I love it.
Everyone's suddenly getting work experience in November now, aren't they?
No, but it's little things like that actually as well that, when you look at it, there's all these things that need doing by April 2026 and it starts to mushroom, but
Is there any resource of kind of to help members to actually understand what's involved from this? Obviously, there's things like webinars and podcasts, which we're doing.
Yeah.
But, is there something that people can actually go away and say, okay, these are the main things I need to think about?
Yeah. So there's lots of guidance on gov.uk. There's a new landing page for it as well, which I can sort of send you the link for if you want to put that in the description. All the professional bodies have their guidance. We've got what we call our Get Ready Guide, which is just a short sort of focused thing of this is what's happening when, and then some practical steps that you need to take that brings in all these things like signing up your clients, getting the agent services account up and running, which we haven't mentioned yet. That's another thing.
Yeah.
About all those practical steps. If you're an ICAW member as well, this is a terrible, shameless plug that I'm getting now. I do a book for Bloomsbury that has a chapter about getting ready. And if you're an ICAW member, you can access that as well. Or if you've got a Bloomsbury subscription. So there's lots of things out there and all the different professional bodies are sort of coming together. If you go to things like Accountex and the trade shows, there's lots of people talking about these things. But I would just start, I think what I would say is the first thing to do is learn the rules. So figure out what it looks like and what it means. Then start looking at your client base. And it's all about segmenting your client base. So you'll hear a lot of people talking about client segmentation. Yep. And that is literally look at your clients, who's in when. Some people might be exempt, which we haven't talked about either, but there are some exemptions out there. And then actually once you know, okay, I've got this many coming in April 26, this many in April 27, this is the work I'm going to do for each of them. That's when you start having a feel for the workflow and what it's going to look like. But you need to start that process now because it takes quite some time.
Yeah. Well, now you've mentioned it, because I was thinking we need to talk about things like who might be exempt. So there are a few exemptions, aren't there?
There are a few exemptions out there, yeah. So the main one is the income. So, it goes 50, 30, 20, that threshold. If you're under £20,000 of gross income, you are out for now.
Unless you want to be in.
Unless you want to be in, absolutely. And HMRC would love it if you did. The other one is, the main one, I think, is digital exclusion. So if you have clients who are digitally excluded who really can't deal with this, you can apply for exemption on the grounds of digital exclusion.
What might give them the... Why might they be digitally excluded? Because
the legislation talks about age, disability, remoteness of location, or actually any other reason. Although HMRC are interpreting that relatively narrowly, I understand. Probably narrower than we'd like. So it might be that somebody is just older. They might have a disability, which means they don't have software that works. Yep. We might have a hill farmer who has no internet access. All these kind of things. If we've got people who genuinely will struggle, you can think about applying for exemption. You can't do that yet.
Okay.
It will open, I believe, later this year, probably towards the autumn. But you will have to ask HMRC and get their agreement for digital exclusion.
I was going to say, what's the process for that? Because that could be more hassle than it's worth if actually you've now got to, justify.
Yeah.
Because you could just say, well, if age is it, then anybody over 85 is just automatically
there's no upper limit, so it does depend. And, and I've known people who are in their 70s who could put me to shame with some of their technology. Exactly. But, if you've got those people, keep an eye out for when that opens. If it's anything like that, which I suspect it will be, it will either be ring HMRC or write a letter. Okay. Which can be a bit of a slow process. But again, if it's like VAT, the rule that applied there was that if you've applied for exemption, you can assume you are exempt unless told otherwise. So if you are getting up against the deadline, it should, I mean, keep an eye out, but I'm assuming they will have to do something similar to that, because if not, people won't know where they stand.
Yeah, I was going to say it's important just to have that certainty, I think. And especially if you're in that category, you know, you might, if you're elderly, you might be worried about actually, have I missed a piece of post from HMRC that says I'm not exempt for some reason or whatever. So hopefully
and there's a few other exemptions as well that I need to be aware of. So if clients don't have a national insurance number, if you don't have a national insurance number as at 31 January of any year, you are exempt for the following tax year. So if at 31 January 2026, no Nino, you can ignore it for 26, 27. Overseas clients quite often.
Is that overseas one? I was going to say, if you're very young, you might not have one yet, but you're probably not within this system anyway.
And then the other one, actually talking of overseas, there is something that was announced at the spring statement, which is a deferral if you have to file an SA 103, so the residence and domicile pages.
Okay.
You have an extra year, so you won't be in until April 2027, regardless of your income level. So there is a slight deferral for them, and there's some other little deferrals out there for some other people that it's worth having a look at. The other big exemptions, the NINA one is automatic. Actually, you won't have to apply for that. HMRC will just apply that, and the income exemption works the same way. If you're below 20,000, you're just not in. You don't have to tell HMRC. There's foster carers. So if the only reason you'd be in is because you've got qualifying care income, you don't need to worry. And there's a few other little sort of exemptions and quirks out there as well, like Lloyd's underwriters and people like that, ministers of religion and all these sort of strange categories.
I had that. I also heard one that if you can't file a digital tax return, i.e. you're on paper returns now, you wouldn't be into MTD.
Yeah, well, it's different, okay. So it's funny because the way it worked for VAT was if you were filing on VAT for paper, that was fine, you could carry over. But it's a lot easier to get a paper income tax return than it was to get a paper VAT return. So just even if you're filing on paper doesn't necessarily mean you will automatically be exempt from MTD for income tax. You need to look at the reason for that in the digital exclusion.
Is it because if HMRC can't put you in? I think
so this was an announcement at the spring statement that they said, and we've had no further detail beyond what was in the spring statement, which was that there will be an exemption if HMRC are unable to provide a digital service to you, I think is the way it's worded. We're not sure what that means.
I think I used to have a client, and I can't think of why they were paper. I think they might have been Ministry of Defence or something.
Yeah, now there are these people really who are like sensitive taxpayers. It may well be that. And it may also be that there are certain, so sort of going back a couple of years, the year-end tax return under MTD, it was proposed that you could either do that in software or HMRC would build the service to do it online.
Right.
HMRC are not building that service anymore, and that was confirmed at the spring statement. So now everything, including year-end, has to be done in software. Okay. Which the point we made to HMRC when that was mooted was, well, what if the software can't cope with your particular requirements, or there's no thing for, Lloyd's underwriters, or because you might not build it, because why would you if there's only 50 of them in the country? So I think also it might be also cutting themselves a little bit of slack for if there are holes in the software provision, that there are some taxpayers who literally can't file. They may be able to come out of MTD. So we're waiting for information as to what that means. It was quite loosely worded. I suspect it's to give HMRC a little bit of wiggle room if there are some people for whom this just won't work.
I think they're going to have something.
Absolutely, yeah. And one thing we're going to push for, I think, as well, is for them to be very, and I think, they are hearing this, is to be very understanding that in the first year, people are going to get it wrong. And I think we need that soft touch.
I was going to say, I can't remember what it was. Something else was introduced within recent years, and it was very much a soft touch approach in terms of penalties for the first.
They've said that with the mandatory payrolling, so they've knocked that back a year, and they've already said that they're going to, give the first year a light touch on penalties. Penalties is an interesting one because as you come into MTD, you're going to move to a new penalty regime as well for late filing and late payment. So lots going on. It's basically, if you're familiar with the VAT penalties that came in 2023, it's that but mapped across to income tax.
Right. Yeah.
The good thing about that new system is that you don't get a penalty straight away for a late filing. You get a point.
I was going to say it's a points thing.
It's a bit like a driving licensing. You get points, and if you rack up 4 points, you get a £200 penalty. And then if you get any more points after that, it's an automatic penalty straight away once you hit the threshold. Is it kind of 1 point
per failing? Or
so 1 point per quarter. So the good news is if you are late filing that first quarterly update, or the second even, you won't get a penalty straight away. So there is a bit of leniency built into that late filing system.
And that's not just the first year, that's going to be an ongoing
so you need to get
system.
up to 4 points, so 4 late filings. And if you don't reach that point, they expire after 2 years. So they sort of drop off your record.
So it really is like a driving licence
thing, It really is just like the driving licence, So there's a little bit of leniency built in there. So I would say don't panic if you are getting to the point where next year where you're going to be late filing those quarterly updates. Do your best, but it doesn't mean all your clients are going to get penalised straight off.
Yeah. And then that brings us back to what we said at the start. You want some accuracy.
Yeah.
So it's not a complete, there's no financial penalty on day one so don't bother just putting 0 or 10,000.
Just to get it filed on time. I think it's better to file something that's more accurate than it, and then a couple of days late. I mean, you need to keep an eye on the penalty points. That's the thing about this shift now is you're going to need some way to keep an eye on it. They will be able to see that in your agent services account, and some software will also be able to play back your client's penalty points totals. It won't be a problem at first because everybody starts at 0. But as we get into year 1, year 2, into year 2, we need to keep an eye on if we've got clients who are getting up to that 4-point threshold.
I always thought, the self-assessment filing penalty, £100, for a lot of clients, £100 was neither here nor there. So do we know the levels of penalty? So you said £200?
£200 once you've got to 4 points.
And does it get more severe if you kind of say, so you paid £200, your 4 points are presumably cleared off and you start again? And then
no. When you reach the £200, you stay at the 4-point threshold. Okay. Every extra late filing after that gives you a straight £200 penalty.
Right. Okay.
So if you get to 4 points in this quarter,
once you build to 4, you're straight into £200 per
every time.
payment.
And the only way you can clear your points is to have a period of good behaviour. So you have to basically have 2 years where you've done everything, filed everything on time, been very good, and then they'll drop all the points off. Yeah. But you need that period. That's why you don't want to get to the 4-point threshold, because once you're there, it's a hit
and
every time.
And actually, that's when it does mount up.
Yeah.
It's the same with the self-assessment. The £100 just seem neither here nor there, but actually, by the time you're like 9 months late, you've got like, I don't know, 1,500 quid or whatever it was.
And it really does ratchet up. Yeah. And I think the £100 is a bit of a funny one because for some people, as you said, it's absolutely nothing. Yeah. Other people who've got actually no tax to pay, it was quite a lot.
Yeah, exactly. So it did matter.
It's always been a slightly strange penalty. Yeah.
So you don't need to have an agent to do this, do you?
No.
If somebody actually understands, is this more complex that actually we're going to have more people wanting agents though? I
think we will. I suspect what will happen is it will be when we get up to, so HMRC have already started writing to taxpayers to let them know this is happening. Yes. They might be in. So they're starting to build the awareness. This is still going to catch a lot of people out because we all know if you're busy and you're running your business, you get the letter, it's April 26th, I'll worry about that next year.
It's HMRC, I don't want to read that
yet. It's a brown envelope, so it's not getting read, I think we'll have a lot of people when we get to March, April next year go, oh my God, what do I do? I need somebody to sort this. And I think also, actually, it'll be when we get into August, September, and the first quarterly update hasn't been filed and they get told that they've got a penalty point. People will, so I think we might actually see a trickle of people coming in now who are a bit more keyed up. I think we'll see more people in the new year when it starts to ramp up the communications. And then actually when they get it wrong and they make a mess is when they'll come to, as we all know, they'll come and ask somebody, Yes, I think some people will be able to do it on their own. I think they're going to need to be quite tech savvy to be able to choose the right software. That's a big if you're not, you're not an accountant, you're not a bookkeeper, you don't know about the different types of software. But I think I am a bit worried some people will get in a bit of a mess. And then they will be asking for help to sort of unpick it all. I think
that's to me, it's a big change because I've only ever known self-assessment, in my career. So you do look at it and go, actually, this is a big fundamental change to the whole process. It's almost necessary at some point to actually say, look, we're in a digital world. We need it to be a bit more.
And HMRC, to give them their due, are doing they've got big plans around the comms they're doing. They're going to do social media adverts. They're going to be writing to be, they've got. They are really trying to get to the unrepresented to raise that awareness because that's, I think, the hard population to get to. The agent community, we're used to frequent changes. It's our job to keep up to speed to a certain extent. So I think it's quite, there are challenges in agent readiness, but actually the unrepresented is going to be a harder market for them to get to. But they have got plans there. It's this digital first approach. I mean, it is interesting because actually one of the big reasons why this is happening is because there's a huge replatforming going on of income tax behind the scenes. So this is all just part of actually, there's a bit of what we always call the iceberg that we see the bit at the top with the quarterly updates. Below that, HMRC are moving all of the income tax records from Caesar, which is their old creaky mainframe, slightly held together with sticky tape and goodwill in parts.
Caesar, isn't that Planet of the Apes? That does make you think about like...
It's CES, a computerised environment for self-assessment.
Okay, so not quite
there we go, got it. Onto a new ETMP, Enterprise Tax Management Platform, which is a new platform that they use for VAT now and that they use for trust registration service and things like that. Okay. So behind the scenes, and one of the reasons why actually it's been a really challenging project for HMRC and costs so much, is there's a huge migration of taxpayer data going on across the mainframe. But that needs to happen because the old mainframe is, slightly past its best. Mm-hmm. And one of the challenges we have, all agents will be familiar with this issue we've had of, the income tax computer doesn't talk to the NIC's computer at HMRC and something like that. That should be solved once we're on ETMP because that's a single platform.
Right.
So we will have a bit more reliability. We'll have more connectivity between different parts of the tax system. And one of the benefits of that is that we should see greater pre-population in that digital tax return we do at the year end.
Yeah.
So things like CIS deductions should come through and things like that. So we should see more and more data being brought through. So actually, when it's happened, it is for a very good reason. But I think, there's a lot going on behind the scenes within HMRC that makes this a huge tech project.
It kind of feels like with quite a few different parts we've talked about, actually this is short-term pain for long-term gain. So it's same for HMRC, for agents. If you do the testing early, you get your clients on, but maybe in 2 years it'll be a lot more. And the same for HMRC then. If they've got everything on one system that talks to each other, which therefore agents don't stop getting frustrated on the phone. Actually, maybe long term. Maybe I'm being too optimistic, but
I think the replatforming had to happen. So I think that's absolutely important, and it should make life better for HMRC and for taxpayers and agents. I think there's a real challenge. I think HMRC spent a long time trying to convince agents this was a great thing. Some of them are on board and they can see the benefits to their business, to their clients. Others are never going to get there, and I completely sympathise with them. I think there was a lot of noise made about this was going to fix the tax gap, and, that's debatable, whether it was going to make life easier. I feel like I've got to the point now, and it sounds quite harsh, but I know some people really don't like this, and I completely sympathise with that. But it is happening. And I think I'm not doing you any favours by not engaging and not being out there talking about it. And you're not doing your clients any favours by ignoring it.
Yeah.
So I think we've definitely got people, and I absolutely feel them, who just think this is terrible and it should be scrapped. But it's not going to be at this stage. Yeah. So we do need to start getting ready regardless of our sentiments about it, I think. Yeah.
That's actually another question I was going to ask you a while ago. In terms of the testing that's happened so far, how many issues have we still got, given we've still got 11 months, but that's not that long when you're sorting these types of things out.
The testing's been small on numbers, it's fair to say. But what HMRC said they were focusing on last year was more on sort of a spread of different income types. So they feel like they've tested key points. There will be more gremlins come out of the system during this year, but that's another reason actually why, if we're being selfless about it, putting a client or two in is good, because not only will it help you get your systems and processes, but it'll hopefully flush out some of those issues on HMRC's side a little bit earlier. How much time is it taking an agent, if they do run into a problem? Do they just say, here's a problem, and then they don't do anything? No, there's the good thing about actually joining the testing is there's a dedicated support team just for MTD testing within HMRC. Okay. You'll be given, if you sign up for testing, a contact details for them, so you don't need to sit on the agent dedicated line trying to get through to somebody and failing. You can go straight to them and they will help you. And I hear that is a very good sort of Rolls-Royce service, that they will really help you with that.
So that's another positive of going into testing. You're not just going to be stuck in this.
Yeah, stuck on the ADL trying to sort it out. Yeah, and not getting paid for it. Yeah,
exactly. Because I think the testing, what we get in April can only be tested so far, can't it?
Yeah,
and I
absolutely.
think perhaps that's a lot of concern if you suddenly say, well, at this point you've got a very small minority amount of people, and then suddenly you're going to have tens of thousands, hundreds of thousands of people on this system. We've got to be. Well, HMRC need to know it's going to work, don't they?
So they need to do the testing themselves. And I know they've sort of pushed dummy data through to try and do testing at mass. But again, it's nothing quite like the real thing.
Not the same,
anybody who's ever launched a digital service will know that, it's when it comes to the wire. So, will there be things that crop up? Absolutely, I think. It won't go smoothly, but... I think we won't know till we get there.
But the more testing, the better.
The more testing HMRC can do, the better, which is why
they've
actually
made it pain-free for
if you listen to their webinars, you go to things like Accountex, they are pushing the testing really low because they need it as well as seeing the benefits for agents.
Okay, so doesn't to be honest, in this conversation, I thought this isn't quite as bad as maybe I thought. But
that'll be get me brownie points
I've
from
not been in the
HMRC
trenches
there.
yet. So.
You know, I'm not trying to minimise the amount of work this will be for a lot, and I know a lot of my members are worried about what this actually means for their business.
Yeah,
it's going to be a rocky transition, but I think we do need to start thinking forward, looking at that preparedness. What can we do to start getting ready? Doing as much as we can now and starting to do that now, rather than having our heads in the sand, because you don't want to get to March next year and realise you've not done things you could have done earlier and made your life more difficult.
Well, exactly, because we're all busy and pretty much all busy all of the time. But you know, if you've actually taken that time, maybe even just spent a few days every few months to actually get a bit more up to speed,
get a bit of a plan going and looking at that client segmentation. It's all these things we can do now.
And then by April, actually, you've saved yourself
because
a lot
this
of pain.
is, the record keeping's got to start in April. You can write off January because you're still doing self-assessment then. That only gives you February, March. That's not a long period to start to have to deal with all of this. So I think
especially if you've got quite a
now.
few clients,
Absolutely,
a lot of clients don't expect to engage with you in February, March, do
they?
So.
And the other thing is, as I said, HMRC are writing to taxpayers now, and they're going to be pushing the messaging out on social media, through traditional media as well. Yeah. And I think you want to get ahead of the curve. I think you don't want your clients, the first time they hear of MTD, to be from a letter rather than from you, because I just think that doesn't look good. So I think you need
it's all about proactive.
Even if it's just a quick, this is coming, we'll have a chat about it later this year. Yeah. I think getting ahead of the curve is good, because it's never good when they come with a letter and go, what's this all about? Why didn't you tell me?
So let's talk a little bit in the time we've got left about the process then.
Yeah.
So as an agent then, at the moment, and I'm remembering what I used to do in personal tax, so forgive me if I'm completely out of scope now. But you've got a piece of software that does your tax returns for you. You've got access to an agent gateway on HMRC. MTD is a completely separate system.
Yeah.
So what do we need to do to go from our current self-assessment to our MTD system?
So the first thing I would look at is your software. So if you're using software already, have a look on HMRC's list on gov.uk of MTD compatible software. Make sure it's on that list.
Yeah.
That list, if you look at it, is in two. It's available now and then coming soon type thing.
Right.
You want to be on either available now or coming soon. If they're not, you need to speak to them to find out what their plans are.
Because if it's not coming soon, then you're running out of time.
And even if they're unavailable now, next time you speak to your client manager or your rep or whoever it is, I'd start talking to them about what they've got for MTD, when they're going to release it.
Yeah.
If you're looking to go and test in, absolutely speak to your software house first and get their okay to it. Yeah. They'll shoot me if I say that. The agent services account, so the agent gateway, you will need to use the agent services account for all things MTD. So not the same as your current gateways that you have for self-assessment.
Right, so we've got two
You're going to have two separate systems running side by side.
Right.
The agent services account, you only have one per firm. That's the other different from the current online assessment, where people can have several different ones going in a firm. You might have one for each office. Only one ASA per firm. If anybody in the firm is doing VAT or trust registration service, you'll already have one. So the first tip I would say is find out if you've got one.
Yep.
If not, get one set up. You can do that whenever. It doesn't mean anything.
Yeah.
Then when your ASA is set up, you need to link all your client authorizations in your current online account.
This is the thing that doesn't do it in bulk. Is that right?
That's another thing.
Okay, sorry.
That's signing up. So you need to link your authorizations across to your ASA. So basically transfer your client authorizations across.
Right, so that's an authorizer's agent.
Yeah, so you don't need to be reauthorized. You don't need to be reauthorized by all your clients. Don't panic. You don't need to go through all that. You map your existing self-assessment authorizations across.
Yeah.
The way you do that is you go in your ASA, enter in your old government gateway IDs for all your other accounts, and then it just sucks them across.
Okay, so is that straightforward?
It forms like a dynamic link. It's fairly straightforward, and it forms a dynamic link, which means that if you add anybody to one, it should map across to the other as well. So you don't need to worry about keeping redoing it. It also doesn't mean you're signing your clients up for MTD. You won't lose access to the old self-assessment account. So you can do that mapping, that linking step of your old government gateway and your ASA at any point in time.
Right.
And to be honest, I'd get it. It's another job I'd get out of the way when you've got a little bit of quiet time, because you could do it now and it doesn't make any difference.
Right.
We've got on the website a bit of guidance around that and some screenshots as well that HMRC very kindly shared with us. So if you're a bit unsure about that, do have a look. But that's one step you can do now. You then need to sign them up as well. So you've linked them to their ASA. They're showing in your ASA. Well, they won't show, but that's a different issue. They are linked into your ASA. You then need to sign them up for MTD through the gov.uk portal.
Yeah.
And you need to do that one by one. So you don't need to transfer the authorisations across one by one. You do that per Government Gateway account. You just enter them and it links them across.
So the Government Gateway account, you literally just put that gateway account ID in.
And it will bring them across and it'll show you've got 27 clients, 72, however many you've got, and you map the authorisations across.
Fine. Okay. So that does sound like...
That's fairly straightforward, yeah. And then you need to sign them up as well, individually.
And that's the bit
That's the bit that takes more time,
Yeah.
But I would say the ASA, check about your ASA. If you haven't got one, get one set up. Get those authorisations mapped across. You can do that now, and it's just one less job to do next year.
Yeah. And so now we have agent authority. Mm-hmm. We've got our clients set up on the ASA, Agent Services account.
Yep, that's one. Yeah.
This is all brand new.
There's so many acronyms in this. It's just,
And so what's the next stage? We're just straight into the next quarterly update.
Right. It will depend. You'll have to speak to, whoever your software provider is, like that, to how exactly to link your ASA across.
Yeah.
And then when they've got the MTD compatibility, it should just be go from there.
Right. So as an agent, we have one particular platform which all of our clients are on. We file tax returns on there. And then we have clients who are on, the software platforms to do their bookkeeping and things.
Yeah, so you might have a mixture. You might have people you're doing it for in your software package. You might have people who are doing it themselves.
So what are we linking? Are we linking the software package or are we linking the agent?
So you need to link your software that you use as an agent to your ASA.
Okay.
And I think that's fairly straightforward. Again, you might already have it done if you're using a package that you use for that.
Right.
But just check, and I'd speak to your software provider once you've got the ASA set up and you've got all the client authorizations mapped across.
Yeah.
Speak to them about that last step. The interesting thing then is you might have some people where you're doing everything in your software. You might have some clients who are doing it themselves in different software.
Yeah.
You've just got to keep an eye on it. And the other practical thing I would chuck into that actually at that point is make sure all your engagement letters are up to date. It's not the most exciting job in the world, but it's so important. Especially if you've agreed things like they're going to do the bookkeeping and the quarterly updates, you just do this. You need to make sure that's in the engagement letter so that they can't turn around in a year's time and go, well, you were going to be doing all that. You don't want to be in that position. So get that clear understanding of who's doing what, get your engagement
Again, it's kind
updated.
of an upfront admin thing that actually is only going to happen once. But
once you've agreed with the client what you're doing, you can do that. So again, it's one of those jobs you can do in advance if you've got a little bit of quiet time later in the year, get started. And we are working on some updated engagement letter schedules, like template ones for the people who use the template ones for professional bodies. So that will be coming out soon as well.
So that's important.
Yeah.
Okay. I think that's pretty much brought us to the end of the hour. But that's been really interesting. Someone who has paid no attention to MTD for the last at least few years. So, but no, thank you so much for joining. And we'll put all those links that we've talked about because I think they'll be hugely valuable to people.
Brilliant.
Getting started. And I think the key message from us is do it early.
Get started as soon as you can. Lighten the load as much as possible.
Great. Thank you very much.
Okay, thanks.